Professional English in Use, Finance, Ian Mackenzie, Banking, Chapter 26, Islamic Banking. A. Interest-free banking. Some financial institutions do not charge interest on loans or pay interest on savings, because it is against certain ethical or religious beliefs. For example, in Islamic countries and major financial centers, there are Islamic banks that offer interest-free banking. Islamic banks do not pay interest to depositors or charge interest to borrowers. Instead, they invest in companies and share the profit with their depositors. Investment financing and trade financing are done on a profit and loss sharing (PLS) basis. Consequently, the banks, their depositors and their borrowers also share the risks of the business. This form of financing is similar to that of venture capitalists or risk capitalists who buy the shares of new companies. B. Types of accounts. Current accounts in Islamic banks give no return, pay no interest to depositors. They are a safekeeping arrangement between the depositors and the bank, which allows the depositors to withdraw their money at any time, and permits the bank to use this money. Islamic banks do not usually grant overdrafts on current accounts. Saving accounts can pay a return to depositors depending on the bank's profitability, that is, its ability to earn a profit. Therefore, the amount of return depends on how much profit the bank makes in a given period. However, these payments are not guaranteed. There is no fixed rate of return. The amount of money the investment pays, expressed as a percentage of the amount invested, is not fixed. Banks are careful to invest money from savings accounts in relatively risk-free short-term projects. Investment accounts are fixed-term deposits which cannot be withdrawn before maturity. They receive a share of the bank's profits. In theory, the rate of return could be negative if the bank makes a loss. In other words, the capital is not guaranteed. Leasing and short-term loans. C. To finance the purchase of expensive consumer goods for personal consumption, Islamic banks can buy an item for a customer, and the customer repays the bank at a higher price later on. Or the bank can buy an item for a customer with a leasing or hire purchase arrangement. Another possibility is for the bank to lend money without interest, but to cover its expenses with a service charge. If a business suddenly needs very short-term capital or working capital for unexpected purchases and expenses, it can be difficult to get it under the PLS system. On the other hand, PLS means that bank-customer relations are very close, and that banks have to be very careful in evaluating projects, as they are buying shares in the company. Conventional banks and Islamic banks compared. Conventional banks pay interest to depositors, charge interest to borrowers, lend money to finance personal consumption goods. Islamic banks give no return on current accounts, share profits with holders of savings accounts and investment accounts, share borrowers' profits or losses, buy items for personal customers with a leasing or hire purchase arrangement. So this is chapter 26, Islamic banking. Oh, let me check how one pronounces the word. Islam. Islam is okay too. Islam is also. Oh, in Arabic it's Islam, actually. Oh, so I was correct. Okay. Islamic or Islamic or Islamic. So Islam is okay. Islam is okay too, and Islam is okay too.